Hello, I'm John Treadgold for the Finance News Network, and joining me from GPT Metro Office Fund is Fund Manager Chris Blackmore. Chris, welcome back to FNN.
Thanks, John. It's good to be with you.
GMF has given its first ever operational update since listing last November. What were the highlights and how has the fund performed against forecasts from the Prospectus?
Yeah, so the listing was the largest AREIT IPO in 2014. We've now been trading for almost 4 months. The establishment cost for the fund came in under budget. We've leased our only office vacancy, and the construction of 3 Murray Rose is coming in slightly ahead of schedule for mid-March. So we are able to reaffirm our forecast from the PDS at this morning's operational update.
Can you give us an overview of the key assets the fund holds and what is driving growth in the fund price?
Yes, the fund's got 6 assets spread across Sydney, Melbourne and Brisbane. If you include 3 Murray Rose, it's worth $376 million, and the weighted average lease expiry is 6.4 years. 70% of the income comes from long-dated leases to household names such as Lion, Samsung and Optus. So we feel that we've positioned the fund well to provide stability of earnings and a high yield, and we feel that investors have responded well to that, hence the trading price that we see today.
What tenancy levels have you achieved and what is the fund doing to increase yields?
Yeah, the office space is fully leased, which is fantastic news. We've got some small suites coming up for expiry this year at the Quad Business Park, so we'll be looking to push our rents at that point. But also importantly, 89% of the fund's income are subject to fixed increases, averaging 3.6%. So these two factors combined, we feel will be helping to push our earnings yield going forwards.
Gearing levels are always important for REITs. What is the gearing level and do you intend to increase this given the low interest rate environment?
So the fund's gearing is currently sitting at just under 27%. It will, however, drift up towards 35% as we get to completion of 3 Murray Rose. We do take a conservative approach to capital management at the fund. We've got a target gearing range of between 25% and 40%. So we're more than comfortable with where those metrics sit within our target range.
How do you see metropolitan office markets performing and how will this impact on GMF?
So national demand increased last year, supply was modest and vacancy rates for metro markets nationally came in. Rents have been rising, which is good for earnings, cap rates have been coming in, which is good for property values, so we feel that the fund is well positioned to capitalise from these improvements.
Now, investors have clearly warmed to the fund. What should they focus on for the rest of the year?
Well, increased demand in the metro markets and the completion of 3 Murray Rose for the fund puts us in an excellent position to make sure we hit those PDS targets.
Chris Blackmore, thank you for the update.
Thank you, John.